Corporate tax exemption for private pension and social security funds, eligibility, conditions, and application process. Private pension funds and social security funds, like their public counterparts, can play a pivotal role in providing financial security and retirement benefits to employees and other members. The UAE's corporate tax framework acknowledges the unique nature and societal importance of these private funds, allowing them to apply for a corporate tax exemption, subject to meeting specific conditions. This opportunity aims to support private pension funds and social security funds in fulfilling their objectives while maintaining strict regulatory and compliance standards. Eligibility for corporate tax exemption for private pension and social security funds. To be eligible for an exemption from corporate tax, private pension funds and social security funds must adhere to a defined set of criteria and demonstrate compliance through a formal application process with the Federal Tax Authority, FTA. This exemption is contingent upon approval from the FTA and is designed to ensure that only funds meeting rigorous regulatory and operational requirements qualify. Conditions for exemption from corporate tax. The following conditions must be met by private pension funds and social security funds to qualify for an exemption. 1. Regulatory oversight by a competent authority. The private pension or social security fund must be subject to appropriate regulatory oversight from a recognized competent authority in the UAE. This oversight ensures that the fund operates transparently, adheres to legal standards, and is accountable for its activities and financial management. 2. Designation of pension plan or fund assets. The assets of the fund must be explicitly designated as pension plan assets or fund assets under relevant laws or governing contracts. This designation signifies that the assets are exclusively earmarked for financing pension plan benefits, end-of-service benefits, or similar entitlements. The purpose of this requirement is to ensure that the assets are used solely for their intended objectives and are not diverted for unrelated purposes. 3. Exclusivity of asset use. All assets and funds within the private pension or social security fund must be used exclusively to finance pension or end-of-service benefits. This restriction ensures that all resources are directed towards the welfare of plan members and beneficiaries, maintaining the integrity of the fund's operations. 4. Beneficiary rights and entitlements. Members or beneficiaries of the fund must have a legally recognized right, contractual claim, or entitlement to the assets or earnings of the fund. This condition affirms that the fund's resources are meant for the benefit of its members and that the beneficiaries hold a legitimate claim to the assets or income generated by the fund. 5. Auditor oversight. To maintain transparency and regulatory compliance, the fund must engage an auditor. The auditor is tasked with confirming, on an annual basis, that the fund continues to meet all conditions necessary for exemption from corporate tax. This annual audit serves as a mechanism to verify that the fund remains in compliance with the applicable laws and regulations. Permissible sources of fund income. For a private pension fund or social security fund to qualify for a corporate tax exemption, it must ensure that its income is derived from specific, approved sources. The income must be exclusively related to the fund's operations and should not constitute a commercial business activity. Permissible sources of income include investments and deposits held solely for the fund's benefit. Income generated from investments, deposits, or other holdings that are solely for the benefit of the fund is permissible. However, the investment activities themselves should not constitute a separate business operation conducted by the fund. Underwriting commissions. Commissions earned by the fund in connection with underwriting activities, provided they are directly related to its purpose, are considered permissible sources of income. Managerial rebates. Any rebates provided to fund managers that do not constitute direct payment for managerial services may be treated as permissible income. Other earnings from investments for members' benefit. Income derived through investments made solely for the benefit of plan members or beneficiaries may also qualify, provided the investment activities align with the fund's purpose and regulatory standards. Application process for exemption from corporate tax. Private pension and social security funds seeking an exemption must submit an application to the FTA, demonstrating their compliance with the established conditions. The FTA will review each application to ensure that the fund satisfies all criteria, maintains appropriate oversight, and uses its assets in alignment with its stated purposes. Upon approval, the fund will be exempted from corporate tax obligations, allowing it to dedicate its resources to fulfilling its commitment to its members and beneficiaries.